Mortgage demand just surged 11% in a single week. Mortgage rates just had their best week in more than 3 years. And for the first time in a long time, first time home buyers are getting younger again. Let's talk about what's happening in the housing market right now, what it means for buyers, homeowners, and realtors. Hey everyone, I'm Ashur with NEXA Lending. I'm a loan officer, husband, father of three, and a former teacher. So explaining this stuff in plain English, it's kind of my thing. Every week, I'm breaking down the biggest housing and mortgage trends so buyers, homeowners, and real estate professionals can understand what's really happening in the market without all the complicated jargon. So let's jump into the biggest stories this week. Mortgage demand just spiked 11% last week according to the Mortgage Bankers Association. Well, why? Well, it's pretty simple. Mortgage rates are sitting at their lowest levels since 2022. Right now, the 30-year fixed rate is right around that 6.09% as a national average. That might not sound dramatic, but compared to where we were last year, it's a big improvement and buyers are responding quickly. Here's what we saw last week. Refinance applications jumped 14% in a week. Refis are now 109% higher than a year ago. That's right, 109% higher. Purchase applications rose 6% for the week, and they're 10% higher than this time last year. That tells us something important. People are extremely rate sensitive. When rates move down even a little bit, activity picks up quickly. Mortgage rates actually had one of their best weeks in years. Over the last 4 days, the average 30-year mortgage rate was right around that 6% mark. And according to Freddie Mac, the weekly average rate dropped to 5.98%, which is the first time rates have been in the 5% range since fall of 2022. Now here's something interesting. There's almost no real difference between 5.99 and 6% for most borrowers. In fact, lenders say about 95% of borrowers would receive the exact same quote either way. The bigger story is simply this. Mortgage rates have stabilized around the 6% range, and that stability is what's bringing buyers back. Now, why have rates fallen a little bit? Well, rates dropped partly because of bond market movement. A recent Supreme Court decision affecting emergency tariff powers created some uncertainty in the financial markets. When uncertainty increases, investors often move money into safer assets like the US Treasury bonds. And when bond demand increases, mortgage rates usually fall. So even though the news wasn't directly about housing, it still helped push mortgage rates down. Another interesting trend we saw this week is that the median age of first-time homebuyers dropped to 35 years old. Last year was 36, and back in 2018, it actually peaked at 38. So this is a small but very meaningful shift. It tells us that younger buyers are starting to re-enter the market. Well, why is that? There's two main reasons. Home price growth has slowed. Mortgage rates have improved slightly. Even small improvements in affordability can bring first-time buyers back into the market. We're also seeing something similar with repeat buyers. The median age of repeat buyers dropped to 47, down from 52 years old last year. That's the first drop after hitting a 25-year high. So overall, we're seeing signs that buyers who had been sitting on the sidelines may finally be starting to move again. Now, shifting to the broader economy. The latest ADP employment record showed about 63,000 jobs added. That's slightly higher than expected, but it's still not a particularly strong number. What's interesting is where those jobs came from. Nearly all of them came from healthcare and education. Without that sector, job growth would have been almost flat. We're also seeing fewer people switching jobs for higher pay, which usually means the job market is cooling a bit. That matters because a cooler job market can sometimes help mortgage rates move lower. We'll get a much bigger picture of the labor market when the official BLS jobs report comes out in a couple days on Friday. Right now, though, the 10-year Treasury yield is hovering right around 4%, which is a key level for mortgage rates. Mortgage bonds actually bounced back this week after hitting an important technical support level. What does that mean in simple terms? Well, the bond market stabilized, which helped mortgage rates stay near their lowest level in years. If inflation data later this week comes in favorable, we could see even more stability or even possible lower rates. So here's the big picture this week. Mortgage demand jumped 11%. Mortgage rates are at their lowest level since 2022. Refinances are up more than 100% year over year. Buyers are returning as rates stabilize, and first-time home buyers are actually getting younger again. This market is extremely rate sensitive, and even small rate improvements are already bringing buyers back. If you're thinking about buying, refinancing, or just understanding what these trends mean for you or your clients, feel free to reach out. I'm Ashur with NEXA Lending, and I'm always happy to run numbers or talk strategy. And if you found this helpful, make sure to follow along, like, subscribe. I post these market updates every week so you can stay ahead of what's happening in housing. I'll see you next Wednesday.